What's up, gang? Welcome back to another video. So in today's video, I want to go over, a strategy that I've used over my time in trading that has helped me flip the switch and become, profitable. Now, is this the only strategy you need to become profitable? No. Is this the strategy that's going to make you profitable? Not necessarily. Why? Because, trading works in waves. A strategy that works now might not work in the future. And that's one thing that's very important to know before you dive into trading at all. That's why I always say it's good to have a foundation in things like support and resistance. The strategy I'll show you today also has, a foundation in there as well. And, just keeping things as straightforward as possible will lead to, profitability. As you see more, market conditions, build up some more pattern recognition, then you'll become, profitable. So I'll show you the strategy. It's definitely something to add to the arsenal, and I think it will work for you guys as well. So check it out with me. So the strategy I want to show you guys today is what I call the London breakout. For those of you who know, it's very similar to a 15-minute opening range breakout. If you have questions about that, I can show you that in another video as well in the future. But for today, we're going to focus on the London range breakout. So for this, as you guys know, or for those of you who don't know, the market has different sessions throughout the day. We have the Asian session overnight. We have the London session early in the morning / overnight, and then we have the New York session, which is more so during the day, Eastern time. So for this strategy, you have to be able to see when the London session was and see when the New York session then begins. So for that, I use an indicator called the kill zones, which is by Oscar VS. What this does is it marks each session throughout the day. I've updated and customized it to just focus on the London session. So between the two parameters right here, this is the London session. Then what I do is I mark out the high and low, not including the wicks. So you can see right here, between these two lines, the high is right here. And then at the low, between the two lines, the low is right here, right? So you can agree with me, this is the, right here, London high. And then obviously the next one would be the London low. Okay, follow me so far? Awesome. So now that we know, this was the high and low of last night's range. Now when we get to New York session, which begins after this threshold, then these are two areas that we're looking for. So what's funny enough is, as you could see today, specifically as of right now, today, we didn't actually break out of this range, which is good to show you that this range does, mean something when we go to the next session. What does it mean? It means that right here, the sellers tried to break through it, but the buyers stepped back in and the range was too strong and we kind of chopped around at the bottom of the range, looks like pretty much all day. So going forward, probably tomorrow or the day after, we'll probably break out one side of this range, and then potentially the strategy will then kick in. So let's go back to another day. Okay, good scenario right here. So how does this work, right? Like I said before, we first mark out the high and low of the session for London, high and low. Then we wait for a breakout of either direction. So as you can see right here, it broke out the top, but it didn't close or finish. This is just the wick, right? And that's why I don't include the wicks, because in a lot of scenarios you could see the wick breakout, but the body didn't. And that just means that, the sellers or the buyers got, reversed in those scenarios and got, overtaken by the opposite direction. So as you can see right here, the session of London ended at the end of this bar right here, and then officially New York session's in here. Once New York session happened, we broke below the London session. And then once we had a full close outside of that session, so you can see right here, this candle open and close outside of that area, then I would potentially look for, a buy or sell in that specific direction. So for instance, I would buy a sell right here. I would look for, the end of the previous wick or the last wick within the body of the range as my stop loss. And then my take profit would be the next key level somewhere down, below, or vice versa, up above. So you can see in this scenario, it would have worked. Let's try the previous day just to see if this is a common thread. So previous day, as you can see, the London sessions right here. We actually took this trade. So this is a London high right here, London lows at the bottom, right? So again, I'll just write it again just because. London high, and London lows right down here, right? So again, we broke below the London low, had a full open and close on the 5-minute candle. So then I could have put my stop loss right here. This instance, we kind of went down kind of far, but again, we could still look for somewhere within the range of my stop loss, take profit somewhere as next key level. Would have been 2 for 2 right there, right? So this strategy is pretty useful. I won't say it's a one size fits all. It doesn't mean it has to work every time, but for my back testing, it works out more times than it doesn't. And you could also include other factors. What other factors can you include? As you can see right here, for this instance, we were trending up all day, and we obviously had a change of direction right here. We broke out of that trend line, and you could see that this bullish momentum became bearish. So right now the overall structure is bearish, and we broke below. So it just makes sense that we continue to the low side, right? In scenario like this one, you could see we've been trending down, 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 broke below. We're obviously bearish. Made sense for it to go lower, right? So using the overall market structure or market trend can help. But again, that's just one other factor they could use. Looking for things like, fair value gaps to be able to look for entries is another good thing. Look for, break of high level support and resistance zones, things of that nature. There's various different things you can look at as other confirmation to give yourself more, intuition when it comes to these things. But this is a good strategy that I like to use. And, let me know down below if this is something that you've used or are interested in using at all in general, or if you have any questions about it. But for today, I think I'm going to stop there, not go too deep into it. But this is a good strategy that I think can, be a good foundation, especially if you're new to it, that you could use on NASDAQ. This works on, S&P 500 as well. And I've even seen it work on gold, GC. So, give it a try. Let me know if it works for you down below. Let me know if you don't like it. But this is a good strategy that I've used. It's still been profitable. It's helped me a lot numerous times. And again, the thing is that, strategies might work today, but it might not work tomorrow. So, let me know your thoughts down below, and, catch you in the next one. See you guys soon. Peace.